Hi everyone, August Biniaz here with CPI Capital. I'm joined by Eva Benesocky. Welcome, Eva.
Thank you, August.
We host the CPI Academy YouTube show dedicated to adding value to our viewers' investment journey. We bring on experts and discuss all topics related to real estate investing. Please subscribe and like the video. We hope you enjoy.
Awesome. Okay, thank you, August, and hello, everybody. Today we are joined by Badri Malynur. Welcome, Badri.
Welcome, Badri.
Hey, Eva. Hey, August. Good to see you. Happy to be here.
Wonderful,
Awesome.
wonderful. We're excited to dive in about exactly what it is that you do. So if you maybe want to start off by telling our viewers about your background, please.
Certainly. I am a VP and co-founder of 𝗖𝗽𝗶𝘁, which is a customizable real estate investment platform. I'm also an investor in a wide range of assets. I invest in real estate, crypto, options, angel, venture, stocks, bonds, and everything else. So I can really speak from a variety of experiences in terms of investing. Being a technologist, have led teams of several hundred people across multiple countries. And I hopefully will bring new perspectives to your listeners and look forward to talking to you.
Amazing.
Thank you.
Awesome. We're looking forward to it. So talk to us about, obviously our show is multifamily, US multifamily investing is very real estate focused. Talk about your start in real estate and how your company and the services you provide relates to real estate and how it helps and assists investors and operators.
Yeah, so let me start with investors and let me start with my background. I've been investing in real estate for more than 30 years. And I was involved in real estate back in India, where I was originally from. And I also started investing in syndication deals. And then what my co-founder and I noticed is it's very hard to invest in syndication deals. It's the process of investing in an individual deal is okay. Here are some of the challenges. There are hundreds of syndicators, lots of crowdfunding sites. How do you choose a deal? And then you really have to put $25, $50, $100,000 per deal. So it's really very hard to build a diversified portfolio. Now, you can always say, I really know how to select the deal, but there is always a risk involved in any individual deal. And so to build a diversified portfolio, you really need more than $500,000 or $1 million. And that's the problem we are trying to solve. So if I may go into some more detail, so what we do is we evaluate hundreds of deals, and some deals go really fast. I mean, there are some crowdfunding sites where the deals we invest in are literally sold out in minutes. I mean, you have to press the button and get it before the deal sells out. So we pre-invest our own money in these deals and then slice it into much more affordable slices. So we may put $50,000 to $100,000 per deal, but then we slice it into $5,000 chunks and let investors build custom portfolios. They can pick and choose their deal instead of a fund where you cannot pick and choose what you are investing.
Incredible. So you pretty much create an index fund for your investors to pool in multiple investments within the same investment.
Exactly. But there is a big difference though. In the index fund, again, the problem is you don't get to choose the stocks you invest in. Here, think of it like a fund, but where you can say, I like Microsoft, but I think Peloton is too risky. So you pick and choose your stocks. Think of it like active investing, where you can pick and choose from highly curated, pre-screened investments, but you can still pick and choose how much you want to invest in this. I don't want to make you feel hungry, but the analogy which I always use is our fund is more like a buffet than a pie. Today, most real estate funds are like pies where the ingredients are already cooked in and you can't choose what you want to invest in. You get a thin, medium, or thick slice depending on how much you invest. But think of it like a buffet. You can go and say, hey, I want more of this. I want less of this. I don't want this. So they can put $10,000 in this, $20,000 in this, $30,000 in this. And here is the best part. We have spent hundreds of thousands of dollars in the technology and the legal infrastructure for this platform. But we generate a single K1. Even if you invest in 20 investments, we generate a single K1 and our investors really love that value proposition.
Very cool. Okay. And how many investments do you have at a time for investors to pick from on your platform, would you say?
Excellent question, Eva. So we do both syndication deals and hard money loans, slices of hard money loans. When I say hard money loans, I'm sure your viewers are familiar with it. These are not 30-year mortgages. These are loans for fix and flippers. But it's always backed by real estate, the lien on the real estate. So you can invest as little as $5,000 in a syndication deal and as little as $500 in a hard money loan, slices. So typically, I mean, we have seen tremendous interest in our platform. So inventory is a little low, but we try to have about 5 to 10 syndication deals at any given time. Some of the deals get sold out. The last deal we had sold out overnight. And we have about 50 to 60, sometimes more hard money loans to choose from. So even if you put $50,000, you can build a diversified portfolio across multiple states, multiple asset classes like multifamily, self-storage, retail, industrial, student housing. You can invest in all of these asset classes with as little as $50,000.
Okay.
And multiple states, of course.
And now, as a passive investor who would be excited to kind of it'd be like a kid in a candy store. Now, cash flow is huge for this type of opportunity. So, how does the cash flow work on your invest? Is it all of the projects together where you get a paycheck a month, or is it? Please elaborate on that.
Think of it like a stock account. So, if you have a stock account, which let's say it pays a dividend, what do you think happens to the dividend? The dividend is deposited in the account. Yeah. It's the same concept. So any cash distribution which we get from our investors, from the syndicators, is distributed on a pro rata fashion and credited to your account, and you can withdraw it via ACH or you can reinvest the money. So in fact, when investors join, we give a kind of a liquidity graph. Somebody may come and say, hey, I have a kid going to college in a couple of years. And then, so we structure your investments so that you have some money coming in 2 years, some money coming in 3 years. But the short answer to your question is it's credited to your account and you can withdraw it whenever you want.
Okay, great. Okay, very cool.
And let's focus on the liquidity part of it. So how liquid are the investments, as the original investor is your group, where then the investment gets sliced out and investors can invest into your fund? Is it the same kind of process where a limited partnership, for example, or an LLC, the term of the project is decided by the GP? How does that work as far as your platform?
So that part is still the same. We may create a secondary marketplace down the road for somebody to exit their investments. As of now, we do not have that. So when you invest, let's say you put $5,000, you don't have to put huge chunks of money in an investment. You have to wait until the deal exits, just like you would do any of your traditional syndication deals, because we are investing in the traditional syndication deals. You have to wait until the deal exits, and when the deal exits, the amount is credited to your account. You can decide to withdraw the money, or you can reinvest in your deal. So
let's go through like a life cycle of an investment. So you said at every time you have between five or so real estate syndication investments, and you also have a number of short-term hard money lending investments. So an investor comes in, they invest $10,000. Now that $10,000 sits in their portal or into their account, and when deals become available, they can use those funds to invest as much as they want into the available deal. Is that how it works?
Precisely. There are a few things I want to clarify. This investment, as of now, we would love to change it. We do want to change it in the future, is open only to US-based accredited investors. So, and the minimum investment is $50,000.
30.
But that can be invested in more than 25 investments. And what you described is absolutely right. So when investors come in, think of this like a stock and a bond portfolio, okay? The syndication deals are more like stocks, and the hard money loans are more like bonds. I don't mean directly, but similar, right? Because you get regular interest from the hard money loans. So people come in and we understand their risk tolerance. Some people may go for a 70-30 portfolio where 70% is syndication deals and 30% is bonds. Some people do a 80-20, which is more typical, 80% syndication and 20% hard money loans. And then they put in the money, and then we can automatically invest for them, or they can pick and choose a deal. They can say, hey, I'm already exposed to California. I don't really want any real estate in California. Or they may say, I like this self-storage deal that does very well in recession times. So they can pick and choose, and they let us know, I want to put $10,000 in this deal, and that's allocated, and your account gets debited, of course. So.
Okay, that's really cool, Badri, because I always educate, diversify, diversify, diversify.
So that's our mantra. That's our mantra. So there are three things. Sorry, didn't mean to interrupt. No. Diversification, transparency, and liquidity. Those are the three things we built our entire company on.
And it's all in one spot for somebody to go and have that diversified portfolio.
Exactly. So we have had tremendous interest in this.
Awesome.
Very cool.
And you said the minimum investment is 30,000. That's
50,000.
50. That's with the 5.
50. Accredited investors. Now, when that, again, I want to go over the kind of the process. So the investor comes in, they invest $50,000. They're accredited. They're a U.S. investor. They see the deals you have currently available on your platform, and they make let's say an X amount of investment on a multifamily deal and an X amount of investment on a short-term loan deal. But now they have some amount of capital left in their account. Does that accrue interest, that amount of capital, or there is no?
No, unfortunately not. But most people don't leave any cash in the account.
Right.
So we do give a heads up saying we have a great deal coming up, and so they put some cash in advance, which will quickly get consumed. So typically, when people come in with $50,000, we have enough of an inventory that are immediately allocated from the existing deals. They may have 5 or 10,000 left for the next deal, but typically we allocate the entire inventory as soon as they come.
Yeah, that would make sense because they keep the deal flow coming. So nobody would let the money sit around. They want to invest right away.
For sure,
that's
absolutely.
Awesome.
Exactly.
Yep. And CPI Capital, our group, has a somewhat of a similar model. So we are a Canadian group. We partner with Canadian investors. We create independent funds for project-specific investments in the U.S. We partner with U.S. operators similar to your situation, but it's not a diversified portfolio. It's deal-specific. Now, the reason I bring this up is that with our agreements and partnerships we have with our U.S. partners, and I'm very familiar with this process because we literally eat, sleep, live this process.
That's right.
Our U.S. operators that we partner with, they allocate a certain percentage of the raise to our group, and that kind of allows us to understand, and our investors, that hey, we have the next 30 days available to raise an X amount of dollars. That amount is provided to our investors saying, hey, this is a $5 million raise, is open for the next 30 days. So that amount is reserved for us. But you were mentioning that in your situation, some deals might get filled up too fast. So I'm guessing that the operators that you've partnered with, there is no allocated percentage of the raise in place for.
Exactly. So let me step back a little bit. We work with hundreds of syndicators and all the major crowdfunding platforms. So we work directly with the syndicators and the crowdfunding platforms. And we evaluate hundreds of deals using a mathematical model, which takes into account dozens of variables. And then we try to leave the subjectivity out of it until the end. And a large number of deals go into the funnel, and only a small subset of deals come out. And then in those deals, we pre-invest our own money into that deal. But I want to be careful. We don't raise millions of dollars. There are several syndicators who have come to us and said, hey, can you help us raise 2 or 3 million? That's not how we work. We don't ask them to hold that capital. Syndicators can think of us as a regular passive investor. And we typically do not, typically we invest between $50,000 to $100,000 per deal. So because the whole mantra is, then you diversify as opposed to putting $2 million in one deal. We would rather invest in 10 $100,000 deals than one $1 million deal. Even if the deal is good, you never know. There is always an inherent risk in real estate, right?
So rather than the deal filling up on the operator side, when you talk about filling up, you're talking about your own internal investment is going to fill up. So you have a $50,000 investment in an operator in Dallas, Texas. Now it's going to fill up internally, not that the operator filled up and didn't allow for your investors to participate.
Right. Sometimes the operator fills up too. So by the time we invest, I told you, right, there are deals where you literally have to press a button and you have like all of 5 minutes to decide and get the deal. And that's kind of the value proposition. We get those very hard to get deals for our investors, but limited to the amount we have bought. I mean, once our inventory slices go out, take $100,000 deal and say it's split into $25,000 chunks. Once that 20 slices go away, I mean, they have to go to a different deal. That deal is no longer available. So.
Incredible.
That's really cool.
I would like to take we dived right into it and we got into the nitty gritty, but I would like to take a step back and see as a businessman, when did you see the need that exists in the syndication or multifamily investing space, in the private equity space, for you to then go through the process of building your structure? And we'll go over how the difficulties and the processes that went through building the technology side of your platform. But talk to us, when did you notice the need that exists for the real estate private equity space?
So this goes back to basically what my co-founder and I found when we invested in syndication deals ourselves. It is just too complex. I'm sure you guys do a great job. People, busy attorneys, doctors, professionals on the go, they do want to diversify into real estate, but they just don't have the time. And so either you invest in a real estate investment trust, which often does not have the benefits of real estate, or you have to pick and choose individual deals. And as I indicated before, you really need $500,000 or $1 million to diversify into multiple deals. You can't put all your money in one deal. We thought, so we were spending all this time in evaluating deals, going to talks. We thought there really has to be a better way, just like you. So the platform we built, think of us like the Fidelity of real estate.
Yeah.
I would love to give you a demo, but I guess since we are talking, I can't give you a demo. You can log in, you'll see your account balance, you'll see how, just like you'll see each individual stock, right? You'll see how each individual slice of your portfolio is doing, customizable. It's not a general, this is how the entire fund is doing, right? Because each fund is customizable to each investor. We have this nice little geographical map which shows you how your deals are distributed. It's one thing to say it's diversified, but it's another thing to see visually, oh, wow, I've invested in all these different states. And some of them actually even take the address, and when they go on vacation, they go check out the place, So
that's cool.
So, and then you can, just like in stocks, you can see what investments have exited. And we build a liquidity graph, which tells you when you can expect your money back. So that's kind of our value proposition.
Great. So your start into the process, the need was when, as an investor yourself, you realize that, hey, it's if I want to diversify, there's multiple operators I'm going to be dealing with, multiple regions, different emails coming in, different kind of forms to sign, to bring all this into one platform, to create that diversification and one operator to kind of deal with and have a relationship with. It's a no-brainer. So I love it. Yeah. I love the idea.
I love the idea.
So now let's talk about building your platform, building a team. You spoke about dealing with hundreds of contractors or hundreds of employees or subcontractors around the world to allow you to create your technology platform. Talk to us about that, because Ava and I have been building CPI for the last year and a half, and we know what complexities exist. Currently, we work with many contractors here, lawyers, accountants. We also work, I think at this time, we're working with 14 virtual assistants from around the world, and each person is what they do. So we definitely we
definitely know there's no I in team.
Absolutely.
Exactly. But creating that team and allocating tasks and
to be able to scale your company to what you've accomplished so far.
Talk to us about that and how that began. How did you scale your company larger? How did you create such a platform which takes so much intricacies and technology that to go into it? Talk to us about that, please.
Absolutely. Extremely important clarification to start with. When I said hundreds of people, I was not talking about 𝗖𝗽. I was talking about my prior corporate career. I had distributed teams of marketing, software engineering. I mean, I ran large groups in a Fortune 500 company. So I was not talking about 𝗖𝗽. 𝗖𝗽 is a much smaller company, but I've had a couple of startup experiences, and we really wanted to build 𝗖𝗽 as a distributed virtual company with no physical offices required or location. So 𝗖𝗽, the core team is 3 co-founders, and our chief technology officer has extensive experience in building. I have a technical background also, but I'm playing more of a marketing role in this startup. I played a technology role in my previous startup. He has extensive experience in developing large-scale systems which can scale to tens and hundreds of thousands of users. So the core architecture and the core business planning and the core genesis of this was restricted to just 3 people, not hundreds of people. But today, we do have a development team and an operations team in India, and we are using virtual assistants in other geographies. So, but it's a relatively small team. I did not want to give you the impression that there are hundreds of people working in Investor. No, this was more from my prior corporate job. But the 3 co-founders are working very well, and we are very pleased with. I mean, people are absolutely amazed. Hey, the 3 of you built this platform. I mean, so it was. It's just been a fantastic experience.
Amazing. Thank you for transparency as well. We really appreciate it. So that's
definitely
the type of operator you want to, the platform you want to work with when the management team is very transparent. We really appreciate that. Now let's talk about scaling your company and kind of taking it possibly to the next level. Obviously, since your team is using your own equity to make the initial investment, having access to large amounts of equity is a very important component of your team and your company. Tell us about that, and do you have any plans to possibly raise more equity for the group to then be able to make more investments and make more product available to your investors?
Surprisingly, the answer is no. Let me explain why. So let me step back a little bit. Our intent all along for this initial fund, we are a technology company which happens to invest in real estate. So our intent was to build a platform, the world's first customizable real estate investment fund platform. The keyword is customizable again. There are plenty of fund platforms out there. So our goal is not necessarily to make our fund bigger and bigger and bigger, though there are plenty of investors who are joining and who are very interested. So there are 2 aspects to our business. We run our own funds, and I don't think we plan to raise a lot of equity to invest in inventory capital for the fund. But we also have a software as a service model. Now I'm switching gears completely from your set of audience who might be passive investors to people who are active syndicators. We have a unique and incredible platform for syndicators to build their own customizable real estate fund. So you get all the benefits which I talked about. Your investors get a single K1. You can start building relationships with your investors, their portfolio at a time instead of an individual deal at a time. So our focus moving forward would be, while we continue to have our funds, to reach out to dozens, and hopefully we'll have 100+ funds by next year, by the end of next year on our platform, who have all built customizable real estate investment funds. So that's our goal.
So that's the technology side of your company, where you're offering a service to syndicators to also be able to utilize the same process that currently Avestor provides to his investors.
Exactly. So they can build their own funds. This would be branded in their name, co-branded actually. And I gave you the analogy of the fidelity of real estate for passive investors. But for syndicators, the analogy we like to use, the Amazon of real estate. What do I mean by that? If you go to Amazon, you can have a Nike store and you can have a Columbia sportswear store. I don't know if you're familiar with Columbia sportswear jackets, right? I'm from the Pacific Northwest. So somebody who goes and buys a shoe may say, let me go buy a jacket. And that's the same concept. We will allow people to create mini stores in our platform, and they will not only have access to their investors, but they'll be exposed to hundreds and hopefully thousands of other investors from all the other mini funds. It's a co-branded model. So you get a number of benefits. And the other difference in our platform is not only do we provide the software as a service, but we handle all your operations for you. We generate all your accounting reports. The generation of a single K1 is incredibly complex. Your accountant won't do that for you for adding custom slices. So we take care of all of that for you. And we offer we have a wide network of service providers. So you as a syndicator come to us, creating a Reg D private fund is very complex in the US. So we have attorneys who work with them, and for one flat fee, we take care of all the state level registrations, the SEC registrations, the Blue Sky registration, creating of all the LLCs. And so we are a turnkey platform for real estate syndicators and other entrepreneurs to create their own funds. What do I mean by that? I don't want you to think this fund is open only for syndicators. We are talking to realtors who want to create their fund on a platform and sell single family slices. So single family is so hot in the US. It's probably hot in Canada too. Let's see, you guys are based in Toronto, right? And,
Vancouver.
Yeah.
Vancouver. Oh, okay. Just up the street then. The Vancouver market is hot. I don't need to tell
It's
you
super
that.
hot right now. Yes.
Yeah.
Super hot.
So think of that. I mean, think of a fund where you buy 6 or 7 houses, and these are rental houses, and you sell 5% slices and 10% slices. So we want to make this platform an innovative hotbed for real estate funds. Let me give you a few other examples. Short-term Airbnb rental fund, rent-to-own model, where you're guaranteed to the tenant is going to buy the place in 2 or 3 years, and they give you a guaranteed appreciation. So we are really thinking of a wide range of funds beyond just a syndication multifamily deal. So
Incredible. Love it. Love it. I have a
That's
feeling
why I
that
love having guests on our show, because the brilliant minds, we get to learn from these
Absolutely.
brilliant minds that have
Absolutely.
done incredible things.
absolutely, no, for sure.
it's very nice to talk to you.
No, definitely. And now, the same way we went through an investor through a cycle on your portal, can we go through the cycle for a syndicator? So let's say CPI Capital wants to use your services. Walk us through what the process is. So you talked about all the on the compliance side, on the corporate structure creation, all those items is assisted by your team. But now the fund is created for us. Now, are we? The fundamental idea of your business is diversification, but where is the benefit for CPI Capital to not allow our investors to invest possibly with our competition or with other syndicators? How does that work, and what's the benefit to CPI?
So you have to think of this as the greater good, right? So just because your investors get exposure to other funds, but you get exposure to hundreds of investors from other funds as well. At the end of the day, they look at your performance, right? I think it would be silly for you to think that your investors will never look at any other fund except your fund. Maybe out. So the first point is your investors first invest in your fund. We are not a crowdfunding platform. They can't just log into our website and say, hey, these are all the funds. Only after they invest in your fund, they get exposed to other funds. But let me go back to your question. The way it works is you come to us and say, hey, I want to create a fund. And then we take care of all the registrations and everything else. We have a legal questionnaire. We completely automate the process. And then our platform offers a lot of services, which I didn't even talk about. We are in the process of doing ACH integrations, which you can use. We are in the process of integrating with a self-directed IRA platform. Today, investing in a self-directed IRA is a ridiculous pain. So we want to make the process completely streamlined so you can do all of that in one place. And then what you decide is you have to decide things like you want to be a 506B or a 506C, accredited investors or non-accredited investors. And then you can decide which of your projects you want to put in the fund. The beauty of the fund is it's an evergreen fund. Since it's not a blind pool fund, there is no entry or exit date. You create the fund, you can keep adding projects. There is no notion of closing it. And investors are okay with that because they're not blindly giving you the money. They're going to come into the fund, and even though they invest in the fund, they're saying, I'll put in this deal, I don't want it in this deal. And so they'll get a single K1. And you can add not only GP investments in the fund, but you can also add LP investments in the fund, like what we are doing if you want to diversify your investor base. So sometimes maybe you're investing as a GP, but sometimes you may want to put LP investments where you're investing in an LP and slicing it and allocating it like we are allocating it to our investors.
And let's dive a bit deeper into this.
Okay.
Of it. So I totally understand us creating a fund and then creating the LP investment, meaning that we take our own equity investment, invest it into other groups and other syndications, for example, leaving that investment available for our investors to pick and choose from. Okay. Now, talk to us about the difference between that idea, which I fully understand now, and the GP investment.
So, to be candid, I'm not sure do you guys do only LP investments, or are you also a GP in deals where you are the general partner in the deal? So
Yeah, in our case, we create a Canadian fund. Our investors invest into the Canadian fund. We partner. The Canadian fund invests into the U.S. fund that owns the asset. We, as an entity, are also on the U.S. side of the general partnership. So we're not just a capital raising platform or an equity investor. We're actually involved in operations on a day-to-day operations of the asset.
Okay. So let me answer your question by giving an example of a couple of people who are starting funds in our platform. They got together. One is an active GP syndication. He does multiple syndication deals and has done dozens of deals based in the US. And the other is a Wall Street guy who has an extensive network of investors. The two of them got together, I'm just giving an example, and became GPs in the fund, and have created a fund in the investor platform. So what they are doing is they're doing a combination of LP and GP deals, right? So there are some deals which they're investing as a limited partner, and then they're because they have their own model for evaluating deals. Yes. And then they put that in the platform and slice it and allocate it to investors.
I fully understand till this part here. So okay. Yes.
And then as a GP, you can invest in your own GP deals and take that and put that GP portion in the fund. And we are the world's first platform which calculates based both on percentage and time. So let's take an example. Let's say
you become an LP in your own investment and take that amount and make it available to your fund.
You could, or you could put the GP slices also in the fund and start allocating it and slicing it and allocating it away to the investors. Let me explain how that works. It's a little complex. You may have to do some editing when you do the final thing. But so here is how it would work. So let's say you're raising $10 million and you're doing a loan of 7 million, and the other 3 million is GP capital. You may already have taken that money, $1 million or so, from some large investors, and you have 2 million left. And in that, you may have $500,000 as your own GP sponsor capital. But what our platform allows you to do is also invest in maybe another $500,000 and start slicing it and allocating it to investors even after the deal closes. So you can, it's a little complex to explain. You can allocate it 6 months after the deal closes, 1 year after the deal closes. But we keep track of the fact that your money was tied up for 6 months or a year. And you not only get a pro rata share of the cash distributions, but you also get a pro rata share of the capital gains. Now, I realize that was a complex topic, but so this allows you to decouple the deal closing from finding or raising all the equity if you're willing to put up some inventory capital.
Got it. And on that GP portion of the investment that's available to the investors, do they get to also participate in any kind of promote the GP?
No, not at all. Not at all.
Okay,
not at all. So, yeah.
That's separate. That's separate.
Yeah. So you have your GP deal, you have your GP equity, which you keep forever. And this is additional GP equity where you put in your inventory capital, and then you start slicing it and allocating it to investors. You can allocate it even 6 months, 1 year, 2 years later too. But presumably you believe in your deal enough to tie up your money for 6 months or a year, and you're getting paid for that, not only in terms of cash, but also in terms of the capital gains when the deal exits. So.
Great, incredible. Now, within your current fund, is there availability for an investor to choose between real estate and other types of investments, or is it only real estate focused?
You know, it's very funny that you asked us. There are so many people who have come and asked us, hey, I want to do a late stage IPO, late stage equity funds, and I want to do commodity funds, and I want to do, tax liens. But so far we have decided to focus on real estate. But the platform and the technology infrastructure, who knows? NFTs, there are all kinds of different things which possibly could be used because of our ability to slice. But as of now, we are focused only on real estate. Good question, though. You're thinking out of the box.
Yeah, thinking out of the box.
Oh, that's awesome. Hey, we really appreciate your time. Let me ask you, let me bring the back. I know you have to run here, but I have a few more minutes to add. Few more minutes. So let's talk about liquidity. Now, your company vision, your kind of mission statement is diversification. Was one more item, and liquidity. So on the liquidity portion, since the fund is actually since the fund management team is actually making the initial investment and now slicing the investment they've made for their investors, so there's lots of kind of freedom and flexibility. Why not pursue, or why not allow for liquidity to exist within that platform that you already have? Because it's you're just selling off your own pieces of the buffet, or the own piece, your own pieces of the pie. Why not allow for liquidity to exist?
We could do that. We could do that. I mean, there is some some enhancements we'll have to do. And also we have to make sure we conform to US regulations. There is a regulation where you cannot sell this within a year. So we have to conform, whereas our slice, we are really slicing it. But if you're actually physically selling it to a different provider, there are some regulations. We could potentially explore that, but as of now, we haven't done that, but that will provide even more liquidity.
Awesome.
The point where I came from in terms of liquidity is that instead of putting $50,000 or $100,000 in one deal, you're putting $5,000 chunks in multiple deals, and we invest in 2-year deals, 3-year deals, 5-year deals. Not too many 2-year syndication deals, generally minimum is 3 years, but a lot of the debt deals are 6 months to 15 months. So we build the liquidity at the time you join based on your needs. You can say, I don't really feel comfortable tying up my money for more than half of my money for more than 2 years. So we structure it that way. That's where I come from in terms of liquidity. And the other point is when the deal exits, unlike other funds, you can reinvest anytime and put your money in a new deal. So.
I should introduce you to the platform that helps us, Token Funder, which is tokenizing the investment and allowing it to be traded
blockchain.
Blockchain.
Okay.
Using the blockchain.
Yeah, we don't use blockchain. We may switch to blockchain in the future. As of now, we are not using blockchain. So.
Token Funder is that platform that does that.
It's really cool, Badri. Your company, like literally, the sky's the limit for you to be able to scale, and it's really cool.
I hope so.
Yeah, I have a feeling CPI Capital might actually be a client of yours in near future here.
We're about to have you create a customizable fund. I know I didn't do a particularly good job in explaining all the tremendous benefits, but there really are, and maybe that's a conversation offline. So.
Yes, no, absolutely.
Wonderful.
Thank you, Badri. Thank you very much. Really appreciate your time. We'd love to have you on again and possibly have a slide and go over in more detail, as also we kind of educate ourselves more about your platform. And
Badri, maybe you can let everybody know the best way to get in touch with you.
Yeah, excellent question. I'm just going to throw out my mobile number there. I hope I don't get a lot of crank calls. So no, there are two ways. First of all, if you want to know more about 𝗖𝗽, we have a tremendous amount of information on our website, blog articles, FAQs, and the website is 𝗖𝗽inc.com. That is AVESTORINC.com. Feel free to call me if you want to talk. You just share your experiences with real estate. My mobile number is 503-860-8374. And my email again is Badri, that's BADRI @𝗖𝗽inc.com. Perhaps you can include that in your show notes. That would be great.
Absolutely. We'll include all your information below this video. They can just click and get in touch with you. Thank you again, Badri.
Yeah.
Really appreciate it.
Badri, we do.
Hey, it was a pleasure. A beautiful house in the background there. And I guess we are all working from home, and I hope to see you in Vancouver. It's not that far from Portland. So
we would love that.
Be our guest anytime.
Yeah, you'll be our guest. Absolutely, Badri. Thank you so much.
Thank you.
Thank you. Have a great day.
You too. Thanks.
Bye-bye.